Hey there. You're clearly tuned in to the wild ride Bitcoin's been on, plus the Fed's latest moves. We've got a whole bunch of articles here diving into it all, and the big question on everyone's mind is why Bitcoin is going up when the Fed's actions usually push it down.
Yeah, it's really interesting how crypto and the traditional financial world are getting more and more intertwined. Bitcoin's price used to kind of do its own thing, but now it seems like it's all connected.
Totally, like a big financial dance. So Bitcoin hit this record high, right? Over $108,000. Some people were saying it was all because of incoming President Trump and this talk of a strategic Bitcoin reserve.
The strategic Bitcoin reserve. That would be a game changer for sure. It'd mean the U.S. government holding Bitcoin, like they hold gold in their reserves.
That sounds like a pretty big deal, especially since Trump's always been such a big supporter of the U.S. dollar. Wasn't he pretty skeptical of crypto before?
He was, and that's why a lot of analysts are scratching their heads about this whole reserve idea. If the U.S. government starts hoarding Bitcoin, wouldn't that totally contradict their whole pro-dollar thing? It just seems, logistically and just ideologically a mess.
Okay, so if this strategic Bitcoin reserve is probably just a rumor, what's really pushing Bitcoin's price up then? There's got to be another explanation. What else is going on in the crypto world right now?
Well, this is where we got to talk about the whales, the big players who hold massive amounts of Bitcoin. These whales have been on a buying spree lately. We're talking over 70,000 Bitcoins bought just last week.
Whoa, 70,000 Bitcoins. That's a lot, right? How much Bitcoin is there even in total? And could this buying spree actually, really affect the price?
So there's a limit to how much Bitcoin there can ever be, 21 million. And right now, there are about 19 million in circulation. So yeah, when these whales go on these massive buying sprees, it can definitely mess with the whole supply and demand balance.
So it's not just Trump's tweets moving the market. These whales are out there making their own waves, and they're not waiting for the government to tell them what to do.
Exactly. And all of this is happening while the Federal Reserve just cut interest rates.
Wait, hold on. The Fed cuts rates, and Bitcoin still goes up. I thought rate cuts usually boost riskier assets like crypto. Didn't everyone think Bitcoin would drop? What's happening?
This is where it gets kind of tricky. It's not the rate cut itself that's freaking investors out. It's what the Fed said about the future. They basically hinted that they're going to slow down the pace of rate cuts in 2025. So that means interest rates could stay higher for longer than people expected.
Got it. So it's not the present, it's the future that's making people nervous. That's pretty complex. What does it all mean for someone thinking about investing in Bitcoin right now? Should they be worried?
Well, if you're thinking about jumping into crypto, you got to understand that things are way more complicated now. The whales are doing their thing, the Fed's throwing curveballs, and Bitcoin's price is reacting to all of it in ways that are, kind of hard to predict.
It's like everyone's kind of playing tug of war with the market right now, but how is all this affecting everything else? Is this just a crypto thing or a bigger deal?
This goes way beyond just Bitcoin. What the Fed does affects the whole financial system. When they hint at higher interest rates down the line, it sends a signal to everyone, basically saying, hey, be careful. Easy money might be coming to an end.
And what does that mean for the average investor? What should they be thinking about?
Well, higher interest rates mean it costs more to borrow money. That affects everyone, from people taking out loans to huge companies trying to finance their operations. And when borrowing gets expensive, the economy can slow down.
So this uncertainty about the future is making everyone nervous. And when investors get nervous, they usually run away from riskier stuff. Does that mean crypto is going to take a hit?
It's definitely possible. Crypto is still pretty new and volatile, so it often gets caught in the middle when investors get cautious. But remember, there are other forces at play here too. Like those Bitcoin whales we were talking about, they're still buying like crazy. Plus, the new administration might be more crypto-friendly with regulations.
Oh yeah, let's go back to that strategic Bitcoin reserve idea for a second. I know we said it's probably not going to happen, but what if, hypothetically, Trump just decides to do it? What would that even look like? How would it work?
Well, it's kind of a thought experiment, but a strategic Bitcoin reserve could be similar to how countries hold gold reserves. The government would buy and hold a ton of Bitcoin, basically betting on its value in the long run, seeing it as a global asset.
So instead of printing more dollars, the government would be buying Bitcoin. What would be the point of that?
People who support a Bitcoin reserve say it would give the country more diverse assets, maybe help protect against inflation, and even put the U.S. in a leading position in the global crypto scene. They think it's a way to, embrace the future of finance.
But wouldn't that go against everything Trump said about the dollar? Wouldn't it undermine the very currency he's trying to protect?
Yeah, that's the big contradiction. It's hard to imagine Trump supporting Bitcoin and the dollar at the same time. It'd be like trying to ride two horses going in opposite directions.
Okay, so the strategic Bitcoin reserve is a cool idea, but probably just a fantasy, like a financial unicorn, mythical and all that.
Right. Now, let's talk about some other players in the crypto world. We've been focusing a lot on Bitcoin, but there are tons of other cryptocurrencies out there. Take XRP, for example. That's the cryptocurrency connected to Ripple. It's been making headlines lately, up over 370% since Trump won the election.
370%. Whoa, that's even crazier than what Bitcoin's been doing. What's fueling that kind of growth? Is it all about Trump and his supposed crypto-friendly policies?
Trump's win definitely played a role, no doubt. The idea of more relaxed regulations has boosted confidence in a lot of crypto projects, including Ripple. But there's more to it. Ripple just launched their own stablecoin, RLUSD, and that's created a lot of buzz.
Stablecoin. Okay, now you're throwing me a curveball. I get Bitcoin, but what's a stablecoin?
Stablecoins are designed to, well, stay stable. Usually they're pegged to the US dollar. The idea is to fix one of the big problems with cryptocurrencies, their volatility.
So it's like a digital dollar, but on the blockchain? Why would you want that?
Stablecoins have the benefits of blockchain, speed, transparency, security, but without the crazy price swings. They're getting really popular for payments, sending money overseas, and even as a way to store value in countries with unstable currencies.
Interesting. So how does this Ripple stablecoin, this RLUSD, fit into all of this? And why is it making the price of XRP go up?
Ripple's basically saying that RLUSD is a direct competitor to other big stablecoins like Tether and USD Coin. They think it's going to take off, especially with Ripple's existing network and all their partnerships in finance.
So it's a battle of the stablecoins, and XRP is like along for the ride.
Kind of, yeah. If RLUSD does well, more people might want XRP since it's the native cryptocurrency for the XRP ledger, which is the platform where RLUSD operates. So if more people use RLUSD, they'll probably need XRP too.
Okay, so we've got Bitcoin whales, the Fed doing its thing, and now stablecoins jumping into the mix. It's a lot to keep up with. How do we make sense of all this? How can we get a clearer picture of what's really happening in the crypto market?
Well, that's where on-chain data comes in. It's a powerful tool that's becoming more and more important for understanding crypto.
On-chain data. Okay, that sounds kind of technical. What is it exactly, and how can it help us understand what's going on in the crypto market?
Think of on-chain data as like the DNA of the blockchain. It's basically all the information that's actually recorded on the blockchain itself. Stuff like the history of transactions, wallet addresses, how much cryptocurrency is being held. Analysts use this data to see trends, find patterns, get a better sense of how the market is behaving.
So it's like getting a behind-the-scenes look at the blockchain, not just the prices going up and down on exchanges.
Exactly. And one of the coolest ways to use on-chain data is to track those Bitcoin whales we were talking about.
Yeah.
By looking at their transactions, we can get a glimpse into what their strategies are, maybe even anticipate what they're going to do next.
So on-chain data could help us figure out why those whales are buying so much Bitcoin. Even though the Fed's saying rates might go up, maybe they know something we don't.
That's the big question, isn't it? On-chain data can definitely give us some hints, but it's not a magic crystal ball or anything. The crypto market is still super complex. There's so many different factors at play.
But it's definitely a valuable tool if you want to stay ahead of the game in crypto. So if you're serious about investing in this space, it's probably a good idea to learn about on-chain data.
Absolutely. Now, let's not forget about the risks involved in the crypto market. We've seen some pretty wild price swings, and sometimes those swings can trigger what we call liquidations.
Liquidations. That doesn't sound good. What are they, and why should we care?
So liquidations happen when traders borrow money, we call leverage, to basically make bigger bets.
Yep.
If the market moves against them and they don't have enough to cover their losses, their positions get automatically closed. It's like a margin call in the stock market, but often way faster and more intense.
So if the price of Bitcoin suddenly tanks, a bunch of leveraged traders could get wiped out, and that could push the price down even further, like a domino effect.
Exactly. That's why using leverage can be really risky, especially in a market like crypto that moves so fast. It can multiply your profits, but it can also multiply your losses. If you're not careful, it can be, a financial disaster.
Yeah, so if you're thinking about using leverage, be super careful. It's not for beginners.
For sure. Now let's zoom out a bit and look at the bigger picture. The Fed's decision to slow down rate cuts in 2025 is a pretty clear sign. Easy money might be coming to an end.
Does that mean we're in for higher interest rates and slower economic growth? Are we heading into a bear market?
It's hard to say for sure right now. But what the Fed's doing definitely tells us things are changing. Higher interest rates can make traditional investments like bonds more appealing, so some money might flow out of riskier assets like stocks and crypto.
So we might see investors getting more conservative, shifting their money around, and that could affect the crypto market too.
It's definitely something to think about. As interest rates go up, investors might reconsider how much risk they're comfortable with and move their money accordingly. Crypto, being pretty new and volatile, could be sensitive to those shifts.
Okay, we've covered a lot today. Bitcoin's ups and downs, the Fed's moves, those stablecoins popping up, and the power of on-chain data. It's clear the crypto world is constantly changing, it's complex, and it never stops moving. What are the main things you want our listeners to remember from this deep dive?
I think the biggest takeaways are, 1, the crypto market is totally connected to what's happening in the world and the economy. Whatever happens in the financial world is going to affect crypto. 2, keep an eye on those whales. Watching what they do, using on-chain data, can give you some really valuable insights. And finally, this is a market that's always changing. There's always new technology, new regulations, new players. So stay informed, be curious, and never stop learning.
That's great advice. This deep dive has been a whirlwind of information, but hopefully it's helped you understand things a bit better and maybe even sparked your interest in exploring the crypto world a little more.
Absolutely. Keep asking questions, keep learning, and remember, there's always something new to discover in the world of crypto.
And on that note, that wraps up our deep dive for today. Thanks for joining us. Remember, there's always another adventure waiting just around the corner. Catch you on our next episode.